Price action is a popular trading concept used to analyze the price of the market, being a simple and yet a very powerful way to spot terrible opportunities. But with so many misunderstandings about the price actions, it's easy to get confused, especially if you are a beginner. In today's video, I want to share 5 price actions tips I wish I knew when I started trading. This which will help you to make better decisions when you have press the buy or sell button first. Reversal usually being with the sharp counter trend momentum. Predicting when the reversal is going to take place in the goal of many price action traders. Unfortunately, there aren't many ways to actually predict when the reversal is going to take place based off the current price actions alone. Most method involves watching for a reversal to begin upon the market reaction. A price point drawn from the past, like the support or resistance level or supply or demand zone. When the market reaches the level or the zone, price actions trades will look for the signs that suggest to them a reversal is about to begin in the market. The most common of these signs would be something like candlesticks patterns such as a pin bar or engulfing candles forming inside the zone of the level itself. With list these are okay to use. They don't really give you much confirmations a reversal is going to take place, mainly because they aren't only showing you one candlestick's worth of data. Using engulfings to actually predict when reversal are going to occur can often be very difficult and result in many false signals. What I tend to instead is looking for the sharp counter trend movement taking place once a market has been moving in the directions for the longer duration of time. Here's an example. You can see the drop which caused this reversal was really sharp and was constructed of bearish large range candles that contained very little evidence of buying taking place during the move down. They are type of the movement you will often see cause a large reversal to take place in the market. Of course, they won't all look like this one, but they will all have the same feature. When they occur, meaning multiple large range candlesticks and few candlesticks of the opposite type forming during the momentum. When you see the sharp movement take place, you should mark the point where the move originated from the supply or demand zone. Because if they are actually being created by the bank traders placing trades to make the market reversal, they will try to get any of their additional trades placed into the market around the same point, which is the point where the sharp movement originated from. And if you see the market move into the supply or demand zone created by the sharp movement and then you spot to common price actions signals like the engulfing candles, then it's usually a good sign to make market is going to reversal and create another swing in the reversal structure. Second, don't trade pin bars that from after the large movements have taken place. One of the best way to improve your success rate trading pin bars is to trade the pin which from immediately after the large movement has taken place. The pin bars have a very low probability of being successful regardless of which technical levels they have confluence into with or how they are constructed. The reason why is because they mainly formed due to the dark traders taking profits of their traders. If you look at the bearish pin bars in this example, you can see it forms right after a sharp move. A higher has taken place with by traders now at the large profit. The big players obviously want to secure some of these profits. The only way they can take profits of their buy trade if they have buy orders entering the market. This means that they have to take their profits when the market is moving higher. When they take their profits, the sell orders which come into the market as a result are much bigger than the buy orders, which causes the market to fall and to create the bearish pin bar you can see on the chart. Typically, price action trades will see the pin bar and will think that it's a good signal to take a short trade when the reality is that although the pin bar may cause a slight reversal to occur, it won't be long before the market continues its up move and breaks through the high of the pin, which you can see actually ends up having an example. So remember, this isn't not a great deal to trade a pin bars which formed after the large movements have taken place. Don't get more wrong. You will see the oscillating pin bar cause the market to complete reversal after the large movement, but the vast majority of them won't, at least not long enough for you to make a decent amount of the profit of a trade. Third, stick to trading candlesticks patterns which form during active market hours. My next tips is to only trade candlesticks patterns which form during the time the asset is actively traded, and don't take trades on the patterns which forms during inactive market hours. For example, if you are trading Forex, Euro USD is traded the most between the time the London trading sessions begin and then when the US session ends. After that, the volume drops off significantly, and there are not big orders coming into the market to cause significant move. Candlesticks patterns you see from during the activity periods have a low probability of working out successfully. In this example, I've marked some pin bars and some engulfing candles that formed during active and inactive hours on Euro USD. You can see that the pin which formed during the inactive hours were clearly smaller in terms of their overall range than the pin bars that formed during active hours. Also, engulfing candles offered bad signals during inactive hours. If you look at the volume of the bottom of the chart, you can see the candles formations, which formed during inactive hours had far less volume than the formations that were created during the active hours, clearly showing the lack of the bank traders' participation during the formation force. Learn read candlesticks momentum. Here's are a few facts. Every candle you see on your charts from the 1 minute time frame up to the monthly time frame tells you a story about momentum. Every candle tells you the story as to who was winning the battle between bulls and bears. Now, an increase in momentum happens when the price increase or decrease very quickly in a short period of time. Let's have a look at these two candlesticks, and let's assume that both of these candles were formed in the same time frame. Let's say the 1 hour chart. Now tell me, which one of these candlesticks has more momentum, candlesticks 1 or candlesticks 2? If you said candlesticks 2, then you are right. Let's analyze each of these two candlesticks and to realize, see what happened here. Candlesticks 2 from opening never made a low during the early stage, which simply means that bulls were in control of these candles from the opening price to the closing price. The fact that there were no candles which on easier end of the candlesticks is another sign that the bulls were in control from start to finish. Candlesticks 1 or other hand after opening it made a low, which meant that bears took control for a while. After that, the bulls took control to drop the price up all the way to the highest price. And then bears took a bit of control again by driving the price down, but not sufficient enough to have a closing price below the opening price. The fact that candlesticks 1 has the same candlesticks length at the candlesticks 2 means they are both traveled the same price range in that time frames, but the fact is the candlesticks 1 has a shorter body length compared to the second candlesticks. That's why the second candlesticks represents the stronger bullish momentum candlesticks. When we talk about momentum, we mean the trend strength for that. You must analyze candle size, the ratio between candles which and bodies, and the ratio between bullish and the bearish candlesticks. A few points that will help you to understand momentum. Long candles with the small wicks usually signals high momentum. More bullish than bearish candlesticks usually signals the bullish momentum. Small candles with long wicks show increasing and the lack of the momentum. In this example, you can see that during the first part of the chart, the bulls were in control. The candles were mostly green and the bullish candles were much larger. At the top, thing shifted with many small candles with large wicks. After that, we started to see a change in momentum with strong bearish candles and more bearish candles than bullish candles fix. Swing heights and the lows that form at the similar price often lead to reversal. Analyze swing heights and lows in this important part of being the price action's target. But a little secret not a lot traders known is that when you see multiple swing heights or lows forming at similar price to one another, it's usually a strong side reversal may be about to take place in the market. Here's an image of two reversals. You can see that before each one of these reversals took place, multiple swing lows had formed at relatively similar prices to one another. The reason you see multiple swings formed so close to open another is because the bank trades are never able to get their entries, trading positions placed into the market at one single price. This is because the size of trades they are placing are so big that there aren't sell orders available in the market for them to get all of the traders excluded. So what they have to do to get all of their buy traders placed is make the price swings up and down to generate sell orders which they can use to get all of their buy traders placed at different but similar prices in the market. So the next time you see multiple swings highs and swings low forming at similar price to one another, it could be early warning sign to make is getting ready to reverse. You want to see the market makes a swings low or highs when the spikes backs to opposite directions before creating another spikes low high similar to price where the other lows or highs have formed. As always, if you want something new and fun, valuable, leave us a like, show your support, subscribe to the channel and click the bell icon to stay in touch when we upload new video. Until next time.